Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Different ways of thinking of value. I'm Paul Harris for Kitco Mining, here at the 2024 Gold Forum Americas in Colorado Springs. Joining me today to discuss this topic is David Baker, Managing Partner of Baker Steel Capital Managers. David, welcome to Kitco.
Thank you.
Now, David, we got to know each other about a month ago during a site visit in Colombia to Aris Gold. You expressed many interesting thoughts over dinner, which was the genesis of me seeking this time with you to sit down today. Before we get to that, we're at an investor conference. What are you hoping to see here?
Well, we've been fairly long the gold market for a long time and we're nice and set, but I think I want to see more about capital management. I think that's a key focus for us at the moment, particularly with these mining companies generating some good cash flow. So capital management is a big issue for us. We're generally buying the larger or above mid caps. We don't generally play the junior or the developers. So and the key thing that we're looking for is probably growth with capital return. And if we get that, we think we've got a bit of a holy grail in a company. So, and there are quite a few companies doing that, have got some growth with capital return.
Now, when looking at the share price appreciation year to date, there's a number of gold companies that are in that sort of 50 to 100%, very good gains, obviously off a low base coming into the year, but not everybody. Over dinner, you spoke of an indicator that you perhaps use as an indication of when a sector's reached the top and perhaps time to sell, and that's when the market capitalization is 7 times sales revenue. Why is 7 the magic number for you?
Well, that's a very good question. I think 7, when I've looked back historically, when I've looked at Barrick over its life cycle, over the last 20 years, it seemed to peak out around that 7 times. And at the moment in the market, we're probably trading anything between 1-2.5 times. You can find some companies trading around that 1 time sales, even slightly less. And I kind of think in a market that's moving and a market that's expanding, some people look for PE expansion. I look for market cap to revenue expansion. So I think that's where it's going. I think as the market progresses, as the margin increases, then the cost of sales is really all coming down to that $1,200, $1,500 an ounce. Some are a bit low, but the sensitivity is not really on the cost, it's more on the revenue side. And when I look at the general market, I see that a lot of the people in other sectors look at market cap to sales. So that's basically what I've been looking at. And it's quite interesting, when you look at the royalty companies would be trading at anything like 15 times sales. So I think that gives you an idea that when the margin comes and people get confident that margin is going to stay consistent, then I think there'll be a re-rating in the sector to maybe not to that full level, because clearly the royalty companies have got a different business model than the producers. But that's historically where I think we've been, and so 7, when people are always asked, what's your favourite number between 1 and 10, and 7 comes up. So it seems to have a few parallels, to be honest.
Okay. Well, with current, that ratio would currently, I think you said, be around 2, so that would suggest that there's quite a lot of increase out there to come.
Yeah, and particularly if the gold price is rising as well, you've got that higher gold price and you've got that multiple expansion as well. And clearly the gold shares have underperformed gold over, the last 12 years or something. If we can get into that position where people get confidence that there's going to be margin expansion and that margin is going to increase in real terms, then I think that, we should see the gold shares outperform.
Excellent. Okay. Another aspect you talked about was that you think gold companies should hold the metal they produce rather than convert it all into cash, rather than convert it all into US dollar bills, as another way to give their investors full exposure to the gold price. I thought that was very intriguing, so I sort of did a back of the envelope calculation using Barrick Gold as an example. Barrick has held about $5 billion of cash on its balance sheet for the last 2 years. 2 years ago, the gold price was about, let's say, $1,800 per ounce, so that would have been equivalent to 2.8 million ounces. If Barrick had held those ounces today, that would be worth 6.9 billion US dollars, 40% more. The benefit here would seem self-evident, so why does nobody do this?
Well, I think the argument that mining companies give to me is that basically the accounting rules and SEC rules basically make it very difficult to account for gold on the balance sheet. But my argument is that, mining companies, a lot of their argument is that the US is going to devalue and fiat isn't a good place to be, and so buy gold. But then they seem to do everything in dollars, and they seem to hold dollars instead of gold. And arguably, the percentage of a gold company's inventory is held underground, or in the ground, But holding a bit of gold, I think, sends a couple of messages to the investors that they've got confidence in the product, and really as a percentage of what they've got in the ground, it's not the volatility, which people argue is another reason that you wouldn't hold gold on the balance sheet, that they wouldn't hold gold, I think becomes a bit irrelevant, to be honest. But I think we're in a situation where how can the bonds, gold's outperforming the T-bills and all, not the T-bills, the long bond and all of these other things, and gold's starting to outperform a lot of things. So I think we're in a situation, particularly for mining companies who want to do acquisitions, gold is an asset that basically should protect your purchasing power. We're already seeing gold starting to outperform inflation or the CPI. So I think it's a reasonable place to hold gold, to hold gold on the balance sheet.
I was at the Rick Rule Symposium in July, and Grant Williams gave a wonderful presentation that really, really touched on this. I'm going to paraphrase his figures a little bit here. He said if you'd have bought a house 20 years ago for $400,000, it would have cost about 400 ounces of gold. Yeah. Today, that house would cost you $800,000, but only 320 ounces of gold. So that really looks and talks about the power of gold to protect value, as a store of value. What would be the benefit for companies to perhaps have a parallel set of accounts, putting their numbers in ounces or grams rather than just US dollars? Well,
I think it would show investors, basically, are they increasing their purchasing power of gold, And some companies look at, their share count or their reserves versus their share count and things like that. But I quite like the idea of showing people that you're making real returns, you're actually making people money. Because when you look at a lot of these mining companies, they say, we're going to invest in this gold mine, and we're going to build this gold mine. But they're doing everything in dollars. And so when the gold price goes up, their returns, are probably inflated in fiat, but in gold, actually, are we getting a return? If a mining company invests 100,000 ounces in a gold mine, are they going to end up with more than 100,000 ounces of gold on their balance sheet by the time they've mined this asset? And gold mining companies are clearly interesting, because if you can increase your inventory in the ground, then you've got more potential to do that. But we don't know how companies have been successful doing that, because they don't tell us. So I kind of think it's an interesting metric to use, but whether people decide to use it is up to them. But I quite like it. I think that your talk about the purchasing power of gold for a house, it's not the gold price going up, it's the fiat falling. So we've got to look at these real ways to protect our wealth.
I want to go back to the sort of capital allocation or capital management aspect you were mentioning earlier. If a company hasn't got anything better to do, it should return the capital it has to shareholders. But in addition to that, you're an advocate for companies returning capital to shareholders in the metal rather than in dollars. The logic being, I suppose, that if investors want exposure to gold, give them the gold.
Yeah. Well, I think that most mining companies, when you ask them what their dividend is, they'll say it's 2 cents a share or 3 cents a share. And we just had a meeting just 10 minutes ago with the company. And I said, well, what does that mean? It doesn't mean anything. It doesn't convey anything. But if you tell us how many dollars per ounce of production we're getting, at least I've got a bit of a measure on basically, am I getting 5% of your revenue or 10% of your revenue? And I think these are very interesting metrics. And then I can compare different companies, as to who's more efficient and who's returning more. And clearly mining companies pay in dollars, but I think that as we move to, gold becoming more part of the financial framework, why shouldn't you give investors the potential to take the money in the dividend in gold as well as dollars and give people the choice? I mean, it's all about transparency, and I don't think it's a bad thing, but a few companies have tried it in the past and done it, and the feedback's been, not many shareholders took it up. I said, well, at least it was their choice. It's
choice is a good thing. Yeah,
you've got to give people the choice, is my view.
Now, another way of companies return capital to shareholders is through share buybacks. Yeah. I recall you've got some pretty singular views. Under what circumstances you think that's a good thing to do and when not? Well,
I think when a mining company makes an acquisition, like we just had a meeting with AngloGold, and they said it's cost them 80 million shares, and then they're looking at their capital return projects, their capital return program going forward. I said, well, if you've issued 80 million shares, if you can buy back those 80 million shares, you've got a good reason to buy back those 80 million shares, but then it will show that actually it's probably been a good acquisition, particularly if you can buy back those 80 million shares before you run out of reserves. Then I think it's quite an interesting metric to use. It's all about capital discipline. It's all about communicating capital discipline. Why are you buying back shares? A lot of people like share buybacks instead of dividends because clearly there's a tax differential between income and capital, and then withholding tax and other things. So often the share buyback is more capital efficient. So I'm not against it, but I kind of like it when there's a specific reason.
We are in an environment where costs are starting to come down, the gold price is going up, margin expansion, increasing free cash flow. What are your thoughts on capital discipline? Can the sector be disciplined? Will it be different this time?
Well, if it doesn't, I'm going to go home because there's no point being here, is there really? I mean, if they can't show capital discipline. But I think, from speaking with mining companies this week, I think there is certainly more emphasis on capital discipline. Whether that lasts until the end of the cycle, we'll see. But at the moment, it's a strong message. And I think that capital discipline is how we encourage the generalists to get in, rates of return and all this type of thing. So I think it's a good message.
Okay. How do you think the rest of the year is going to play out in the gold space?
I think it's probably going to be volatile, but every time the gold price falls, I feel there's a bit of there's some strong buying coming in, but we've seen this before, and every time you get really enthusiastic, someone comes and kicks you in the belly, and it's not going to go up in a straight line, let's face it. But I think that when I look at gold, people say, gold's expensive, but when you look at it relative to a lot of other things, it's not expensive, relative to the S&P, relative to money supply and the debt and la-di-da-di-da, we all know the metrics. I don't think it's expensive, and no one really owns it. And I think we're going through a phase now where basically gold's starting to outperform inflation. It's CPI, it's outperforming bonds. It hasn't quite started to outperform the S&P, and I kind of think that's the trigger that will trigger the capital rotation. And the gold shares are right on the cusp of starting to outperform the S&P, and if we get that, Newmont's already started outperforming the S&P, but it had underperformed so badly it wasn't a big thing to start outperforming. But if that trend continues, then I think it's going to be very hard for investors not to buy gold. And I think that, we've been seeing the number of shares on the GDX fall, the purchases of ETFs has been fairly low. It started picking up a bit. So I think there's potentially a lot of firepower, a lot of continued buying. And clearly the central banks have decided that they're going to, they want a bit more gold on their balance sheets. And so I think there's a few buyers, and I think that the people that aren't on there will find that they might get squeezed. So I think it could be quite interesting, but you never know.
Well, with gold hitting $2,600 per ounce last week, it certainly provoked a few more smiles around this conference than last year.
Yeah, I think it looks good. I mean, we're very big bulls on silver. I like the silver market, and I think silver's got a long way to catch up. And but we've talked about mining companies holding gold on their balance sheet. I've been pushing Fresnillo, which is the world's largest silver producer, to basically put they've got a strong balance sheet, buy a bit of silver. It's a very strong message to your shareholders that you're very confident on this metal. So I think these things are all messages that people are looking for, is my view, or send good messages about the sector.
Excellent. Well, it's been a very interesting conversation. David Baker, thank you very much for joining us today.
Thank you very much.
And we have a lot more to come from the 2024 Gold Forum Americas from Colorado Springs. So hit that subscribe button to see all our videos. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.